Hello, everyone. We have huge news on the future stimulus package the Biden administration is proposing. I'm going to go to Zero Hedge, and I just briefly touched on this article before because they started using the word stimmy. That was pretty funny. I obviously didn't come up with that term, but I'd like to think that I popularized it. We'll see. So, anyway, yields surge as stunned traders learned Biden to propose massive $2 trillion stimulus. So, and this is in addition to all the stimulus we've had. This is addition to the $5 trillion deficit we ran in 2020. This is in addition to the two $600 stimmies that people just received. I mean, I've been saying for quite a while that I thought the United States would do UBI permanently, and most people told me that I was fear mongering and tinfoil hat and all the typical terms. But when we see the news, I think it's coming to fruition. It's becoming a reality right in front of our very eyes. So last week, Goldman sparked a buying frenzy in the market and selling in treasuries when the bank said it expects the Biden administration would unveil a modest, keep in mind, $750 billion is more than the bailouts in the GFC. And now we're calling this a modest $750 billion fiscal stimulus plan, including some $300 billion in stimmy checks to Americans. But it goes on to say that this isn't even close to what Biden is proposing. Those were the expectations from Goldman Sachs. But if markets ignored the Schumer report, they sure as hell noticed the CNN report, which just hit after 9 p.m. This would have been last night, which prompted traders to take a double take because apparently Schumer pressed Biden so hard to expand the next round of stimulus. He literally squashed the president's-elect. They kind of use some of the over-the-top lingo I use in my thumbnails, who is now expected to unveil a major cerveza sickness relief package on Thursday, today, and his advisors have recently told allies in Congress to expect a price tag in the ballpark of $2 trillion. Staggering numbers. It says the Biden team is shooting for the moon with this approach. I guess so. And that's great with Zero Hedge. Uses pictures like that. It's hilarious. So now, how does this affect the amount of money going to individual Americans, which as investors, we have to think about how much money is going to be going into consumer goods and services and also the stock market, trying to figure out what's going to happen to the dollar relative to asset prices and the stuff we buy every day. It wasn't immediately clear just how big the stimmy checks would be, but it is safe to say they will be at least $2,000 and perhaps much more. Which, while great news for stocks, as much of this money will be finding its way into Robinhood accounts, very bad news for bond yields. And remember that bond yields going up on the 10-year is bad news for the economy and bad news for the government. Although the short end of the curve has remained very low, if the interest rates in the real economy start to go higher and higher and higher, because our economy is built on asset prices, debt, and confidence, the price to service the debt is going to increase. The price of additional debt will increase. Therefore, the debt amounts will go down, assuming that incomes are flat, if not decreasing, with all of the lockdowns and what's going on with the cerveza sickness So that means less economic output. Although we could see GDP go higher in nominal terms because the government is spending so much money and giving out so many stimmy checks. But just because nominal GDP goes up doesn't necessarily mean we have greater economic output. It doesn't mean we're getting wealthier. In fact, we could be getting poorer even if nominal GDP is going up. So let's go over to what the bond yield, the 10 years, actually doing on this news. This is was Market Watch. Oh, there I am. Okay. I guess it refreshed on me. Okay, so 8 o'clock this morning, right around 1.085, gone up to 1.11. So not up dramatically, but up significantly. And most people look at that and say, oh, well, it's only a few basis points, no big deal. But for the 10-year Treasury to move that much, it's actually it's news. So the market is seeing the potential $2 trillion stimulus package, and they're selling 10-year Treasuries. There's more sellers than buyers. Therefore, interest rates go up. And again, that could potentially translate into higher interest rates in the real economy, bringing economic activity down even further than it's already come down as a result of the underlying fundamental flaws in the economy, in addition to what we've seen with the cerveza sickness.